Eric, let's put your presentation on.
Okay, thank you, Matthias, and thank you for arranging this webinar, and congratulations to all the managers participating. Um, no disrespect to my wife, but for the last 2 months, nearly every day, or definitely a few times a week, I've said, honey, I don't think you understand the magnitude of what's happening in the stock market. I usually get an eye roll and, yeah, well, I think she's finally starting to get it. What I'm excited about today is that I know that everybody's that's participating and watching actually gets what's happening. It's been unprecedented. So I'm excited to share with you how our program in Q1 of 2020 and over the last 9 years has been profitable. Now, 3D Capital has a new solution for an old problem. What's that problem? We all know what the problem is. The S&P goes down and it can take a long time to recover. So the problem is really twofold, right? Losses and time. Here you can see 90 years worth of data, multiple 30% declines, 250% declines in 2002 and 2008, and then obviously the last 35% decline that we just went through. This is one of my favorite charts. Stay with me. I know it's very busy, but there's a lot of history here. I like to say that the S&P 500 grinds higher and sells off sharply. There's no better example of this than the last 3+ years. In 2017, we had 12 consecutive up months, never been seen in the history of the stock market, and historic low levels of volatility. That was followed by the first stock market correction of 2018, where you saw 4 months of profits given back in 7 days. Again, the market grinded higher for 6 months and then gave back over 100% of the profits in 12 weeks and dropped 20%. That has been the historical norm of the stock market, grinding higher and selling off sharply. Clearly, the first quarter of 2020, over 3 years of gains given back in 24 days. Now, these red arrows down are opportunities. If you're not taking advantage of the downside, you are giving up upside. And you're actually really giving up time if you think about it. We all know how important it is to stay invested in the stock market, right? You're told you have to stay in. You don't want to miss the best days. Missing the best days matters. Here's about 5,100 days worth of data. Your annualized return, staying invested the entire time, is 5%. If you miss the 15 best days, your return goes negative. What matters more is missing the worst days. If you miss the 15 worst days, your annualized return goes from 5% to 11%. Our solution, the 3D Capital solution, is managing equity market risk every day because, as you just saw on that previous slide, every day matters. Our solution is called the 3D Defender Program. The investment objective, just like the other managers, is to produce uncorrelated positive returns. How do we do that? To consistently profit and outperform when the S&P 500 is down on the month. We do it daily. We have a live 9-year track record. And a lot of people may not know this, but in the longest bull market in history, there's been over 3 years cumulatively of declines. So again, I'm going to repeat, over 3 years of declines in the longest bull market in history. For our track record, that's been 37 down months. Those are 37 opportunities to be profitable. The 3D Defender program has been profitable 70% of the time during that time and has outperformed the S&P over 90% of that time. How do we do it? It's daily dynamic defense in the S&P 500. I say this throughout the presentation. Managing equity market risk every day matters. This is a volatility-based intraday short bias program. It's global macro, systematic, and data-driven. So we're only trading the E-mini S&P 500 futures contract, but we're using the entire globe to identify the price action in the S&P. We also do not take positions overnight. The question is, why don't we take positions overnight? Here's another fascinating chart. The S&P historically goes up overnight and down during the day. This is an absolutely fascinating chart. This is the last 25 years in the S&P 500. The top line is overnight or outside regular hours, and the red line is what happens during regular hours. So as you can see, historically, the market goes up overnight and down during the day. The next chart is a perfect example of this in 2018, which we call the norm. The S&P's first down year in 10 years was 2018. You can see overnight, the market was up about 11.5%, down 16% during the day, closed the year down about 5%. To put things into perspective of how different 2020 has been, look at this, down 22% overnight and up about 2% during the day. It's been an absolute 180. And that's why I've been telling my wife how crazy it's been. Okay, so we have a live 9-year track record. Again, we only invest in the S&P 500, right? That's the problem. We address the risk head on every single day. Everybody's guaranteed to make money when the market goes up. I'm not concerned about that. I'm concerned about making money when the market goes down. So the 3Ds, daily dynamic defense, managing the risk one day at a time, that enables the Defender program to be dynamic and adjust to the daily narrative of the globe and the S&P 500. That has enabled us to profitably short the longest bull market in history and the fastest bear market in history. We've also done that with a negative correlation to the S&P. This program can be used as a capital efficient overlay or a standalone investment. So the methodology behind the machine. As I said earlier, it's data driven. It's a systematic approach that relies on logical, persistent, symmetrical, and statistically significant relationships that exist between many of the world's markets. I refer to this as the global relay race. From a risk management perspective, we only carry positions for one day, so there is no overnight risk. So how do we maximize returns and minimize losses? We have time-based exits and price-based stops. This is the fun part. This is the global relay race at work. So in 2018, the first stock market correction, it didn't come out of nowhere. There were signs. What were those signs? If you looked at what happened in the Nikkei in the last week of January of 2018, the Nikkei dropped by over 4%. The Euro stocks dropped over 2%. And again, that's the last week of January. The S&P confirmed that global stock market weakness, and in a hurry, in the first 4 days of February 2018, the S&P dropped 11% in 4 days. We can go to another recent example, and that's the first quarter of 2020. It did not come out of nowhere. There were plenty of signs. If you looked at crude in January and February, it had dropped 25%. Copper was down over 9% in January and February. While the S&P was making new all-time highs in mid-February, you had already seen these declines in crude and copper. We were just looking for confirmation, and sure enough, we got it. The S&P dropped 36%, but in the month of March, it was down 12.5%. What's interesting about that monthly decline in March is that it all happened overnight. 15.5% of that was overnight. 3% of it, actually, the market was up during the day and down overnight. So the global relay race, whether it's the 1987 stock market crash, the first correction of 2018, the 20% decline in the fourth quarter of 2018, the fastest bear market in history in 2020, or even the coronavirus itself, global relay race starts in Asia, spreads to Europe, presents itself in the US. This is, you'll see, there's a lot of talk about diversification and correlation. 3D Capital is addressing the largest risk in your portfolio head on. The best way to protect yourself from a falling stock market is to short it. Allocating to other stocks, as you can see here, emerging markets, growth, small cap, value, they're all guaranteed to lose money when the stock market goes down. That was made evident, obviously, in the first quarter of 2020. And here is our live 9-year track record. This is 3D Defender actively managing the worst days in the S&P 500. You know, we get a lot of questions about, well, how is that even possible? Because what we do is we defend equity market risk when you need it, not when you don't. We know that historically the market goes up over time. So if it goes up over time, what you have to do is drill down, look at it every single day. If you manage the equity market risk every day and can capitalize on the downside, you're going to have more upside. You're going to have lower drawdowns. It's going to give you less time to recover. And we all know that time is the greatest gift you can give anybody. minus health, of course. So this is what it looks like if you add a little bit of defense into your long only, what I call offense. Here's the gray line on the bottom. That's the S&P 500. The blue line above is the 3D Defender program. That's the short bias, just trades the E-mini S&P 500 futures contract. And the green line is the combination of both. A little bit of defense can go a long way. We have a long history of profiting from declines in the S&P 500. Everybody has the same problem. Our solution is the 3D Defender program and the E-mini S&P 500 futures contract. The market's going to go up and down forever, well past our lifetimes, children, grandchildren. Can we add value? That's my why. I get up every single day because I want to help protect stock market investors. We can make a difference and we can help you. And this was a quick little insight and look under the hood into how we've been able to successfully short the longest bull market in history and the fastest bear market in history. So thank you for the time, and we encourage and welcome a call, even if it's just about the E-mini S&P or our program or how we can help protect your equity market risk.